In 2025, oil is no longer a commodity. It's a lifeline of the world economy. From powering cars and planes to driving industries and warming homes, oil is in touch with nearly every corner of our lives. Its cost is more than a figure on a screen. It's an indicator that influences transport, business margins, food bills, and even the cash in your pocket. That's why monitoring oil prices is not only for investors, it's for anyone who purchases, sells, travels, or consumes anything. The cost of oil is influenced by numerous forces, but the three most significant are supply, demand, and geopolitics. Let's begin with supply. Nations such as Saudi Arabia, the United States, Russia, and members of OPEC dominate the majority of the world's oil production. When they choose to reduce or expand supply, the world market responds in a split second. A slight reduction in oil supply can increase prices on every level, impacting the whole world, ranging from a Cairo bakery to an American trucking company. Demand is the second main motivator. In 2025, the world's booming population and expanding industries, such as China, India, and Brazil, require more oil than ever before. But the demand also ebb and flow. As economies expand, people take more trips, companies ship more freight, and factories work harder, all using more oil. But as economies contract, as they did during a recession, demand decreases. When that occurs, oil prices tend to decline as well, sometimes sharply. Then there's geopolitics, a force to be reckoned with, and one that is inherently unpredictable. Much of the world's greatest oil reserves reside in politically volatile zones. A war in the Middle East, sanctions on a country that exports oil, or a pipeline shutdown can cause shockwaves in international oil markets. Even if physical supply isn't immediately impacted, fear alone has the capacity to trigger speculative price spikes as buyers and sellers scramble to cover themselves. Aside from physical supply and demand, oil prices are also influenced by speculation. Financial market traders purchase oil contracts based on expectations of future prices. These wagers can affect short-run fluctuations, even more so than actual ones. Speculation can drive prices above what fundamentals would dictate in uncertain times, or drop them quickly if traders anticipate a decline in demand. Green power has joined the mix as well. Most nations are putting a lot of money into alternative energy sources such as wind, sun, and electric cars. This worldwide shift, though promising for the planet, will also be redefining the future of petroleum. As of 2025, however, we are still a long way from replacing petroleum entirely. Transition is a gradual process, and oil is still critical to most sectors, particularly transportation, aviation, and heavy industry. For companies, oil prices can spell the difference between profit and loss. Transport operators buy more expensive fuel, manufacturers experience higher production costs, and import-export companies observe freight costs increase. With higher costs, companies pass the increase on to consumers, which is to say that anything from foodstuffs to materials used in construction can become pricier. This, in turn, impacts the purchasing power of regular folks and can trigger inflation. Inflation is perhaps the greatest effect of increasing oil prices. With fuel pricing going up, it affects the cost of almost every item that depends on transportation or energy. Central banks, reacting to inflation, could increase interest rates, which would make borrowing money, acquiring housing property, or investing in business expansion more difficult. Thus, oil prices indirectly affect living costs, employment, and economic stability in most nations. Governments are taking a close look. Governments in many nations are currently developing more intelligent energy policies to insulate themselves from oil shocks. Some stockpile emergency oil supplies, some negotiate long-term deals with varied suppliers, and some invest in domestic sources of energy. Energy security is an issue of national security, and nations that prepare well can better manage world price fluctuations. So, what can ordinary citizens and companies do? First, keep up with it. Tune into reports on oil-producing nations, growth projections for the economy, and government energy policy. Second, be prepared. Budgeting fuel expenses, looking for energy-saving means, and thinking of suppliers nearby can help. Third, keep in mind that oil prices will not remain steady always. Awareness and flexibility are the keys to coping in uncertain times. Summing it all up, oil is not simply fuel. It's a power that drives economies, dictates prices, and determines the fiscal stability of countries. To understand oil prices is crucial in 2025 for businesses, consumers, and governments. Once you grasp how oil functions, you start comprehending how the world works, and that can assist you in making wiser choices within a rapidly evolving global world.